Well, thanks so much for tuning in to the Trade Setup. I'm Neeraj Shah, and it promises to be a more bottom-up kind of a day as opposed to being an index trending kind of a day, and I'll get to the reasons why. First, what's happened around the world. So the US markets pulled back a little bit in trade yesterday. You had about, you could argue about 1% kind of a drop for the NASDAQ. Dow and the S&P also cooled off a little bit. So it was a day which was quiet with marginal losses in the session. So you have to bear that in mind. Now, there are a couple of things that all of us need to ponder, and there's this chart on the Bloomberg terminal, one which speaks about how there is a perfect negative correlation between yields and the S&P 500. So that is one, and two, that's for the US markets. And then for the Asian markets, or if you look at the entire ASEAN lag, the beauty is that the 12-month out EPS projections for most of the Asian indices are back to the early 2020 levels. So ignore the yellow line, which is the ASEAN region per se. But if you look at AsiaX, Japan, MSCI, Asia Pacific, etc., and the EMPAC, all of those EPS projections are back to nearly 2020 levels. Now, viewers, keep in mind that the difference or this importance about this is that if Indian EPS projections are in line with being back to the world, which means that as of now, the belief is that we might largely do what we were slated to do pre-COVID. And if indeed that were to change and do better, then that only augurs well for the Indian leg going ahead. Time will tell. But the larger point that I'm making is we are not alone. Across the Asia-Pac region and the emerging market region, EPS projections and earnings projections are back to square one, so to say. Speaking of Asia, by the way, how is it doing today? I think we've had a mixed start to reasonably okay. Like I said, we might have a start which is 0.25% higher or 0.25% lower or thereabouts, or 0.5% higher, 0.5% lower. That could happen today. But yeah, that is how the Asian screen Nifty 2 could be in its own sweet way choppy, but you would probably have a start which is in or around that range, and then we may actually meander throughout the day in largely that range. Okay, there's about 0.25%, but moving around within a 0.5% range, so to say. And I presume that's how it would be, because the US futures too, they've pulled back a little bit, but the US futures are still in the green, so to say. So we don't have too many negative cues, we don't have too many positive cues, and therefore index trading might not be possible. That's the larger point that I'm making. So therefore, what's the trade setup looking like for the day today? You would probably believe that the global mood is quiet and the indices are likely to be sideways. The larger market breadth, though, is positive, was positive yesterday as well. And the mid-cap index is showing outperformance to the Nifty. Remember, we was in Friday's session too. Small caps had fallen only 0.74% if the Nifty, while the Nifty had fallen 4%. And from what dealer desks are saying, there is heavy buying in real estate stocks, and therefore they might see some activity today. I will watch out for almost all of the real estate names, the quality names, but there's some heavy buying at the local dealer desks in trade yesterday and day before. The other interesting bit is that FIs have come back. So about 2,200 crores worth of buying from the FIs, while the AIs sold about 854 crores. So that picture is not looking all that bad. And therefore, you got to question if Friday's scare was just a scare. And has it been bought into already while people were talking about much lower levels? Will that not happen? Difficult to say. But for now, the cues are okay. There's an IPO which opens today as well. So you've got to be mindful of that, MTAR Technologies. So do watch out for that if you want to know more about it. Our website will have information, and my colleague Sajid would do an interview with the management too. So you might want to tune in for that as well before you decide whether or not you want to apply or subscribe to this IPO. So keep that at the back of your mind. What about stocks to watch in the session today? I think that's the key thing. So aside of telcos, and keep in mind, viewers, that telecom stocks, because of the bids that have been made, are they are the noise today, because I don't think there is too much of a investing or a trading impact. Yes, people will argue that Bharti and Reliance have put in the max money and therefore it's a two-way race, but I've heard that argument now for the last 12 months. So it doesn't do anything. Stocks that will move today is the key thing, right? So Ircon International is something that all of us should watch out for. The government proposes to sell about 4.7 crore shares, or 10% of the equity, at an OFS. The OFS will be at a 10% discount to Tuesday's closing price. Remember, this is being done because the government equity is higher than the mandated one. The key is, as has happened with a number of stocks in the past, yet yes, because the OFS is happening the discount, the stock may start off lower. But if, and it's a big if the OFS gets subscribed heavily, and some stocks tend to bounce back. So watch out for Ilcon International. There could be movements today. JB Chemicals. This is, viewers, this is important because this is the first analyst meet post JB Chemicals being taken over by KKR. And in that analyst call, they gave some idea about what they're likely to do. So they are saying that organic growth will outperform industry's growth. And therefore, if there is inorganic growth, then that's separate. Infrastructure and resources are available to support growth in near and the medium term. Pretty confident about their growth prospects not being hindered by lack of resources. And they plan an expansion of bigger brands beyond the tier 2 towns and 6-8 annual launches as well. So fairly optimistic and growth oriented commentary given by JB Chemicals. But the smart investor knew about this. So keep that at the back of your mind. You would expect Bharat Forge and RK Forgings to react a bit because the Class 8 truck orders have risen. February, on a YOY basis, they're up about 209%. That's a really strong boost for both Bharat Forge and RK Forgings. The orders were up about 2.8% month on month. And the February month, as I note, is the 5th consecutive month where orders were higher than 40,000 units. So therefore, you have to watch out for both Bharat Forge and RK Forgings in the session today. Those two are the principal ones which react to this. So therefore, watch out for them. I'll watch out for Ion Exchange. So this is an interesting one and a tricky one because, yes, Rakesh Jhunjhunwala has sold 1.5 lakh shares and Rare Enterprises another 3.87, which means in effect, Rakesh Jhunjhunwala has sold close to about 4.25 or 5.25 or 5.5 lakh shares. But the other interesting bit is Plutus Wealth Management has bought about 4.75 lakh shares. I hear from a lot of people that Plutus Wealth is a smart investor based out of Dubai, I presume, and they are doing a lot of very interesting deals, very well connected, information network, very robust. So it could be interesting. Normally, Rakesh Jhunjhunwala buying or selling evokes that kind of a response on a stock. It might be interesting to see what Ion Exchange does today, simply because of the nature of the buyer as well. Let's wait and watch. The one pocket that people should keep in mind, and I'm driving this out of a report that came in from Systematic Shares and Stockbrokers. They did a conference wherein they spoke to, I think that the inference that they drew about the pipe companies is interesting. Because PVC, polymer prices are increasing, the belief is that they may hurt volumes for companies which have got a fair degree of exposure to the agri pipes, which is Finolex Industries, Supreme Industries, and Apollo Pipes, all three, because farmers are apparently delaying the laying of the pipes for a month or two for better pricing to come in, if it does come in. But in effect, if farmers are delaying, which impacts the volumes for some of these companies, and therefore Finolex, I presume, gets impacted the most. It'll be interesting to see Supreme and Apollo Pipes as well, and how they do in the slightly medium term, because the earnings may not be as robust as people would have penciled in. Let's wait and watch what happens. So these are a few stocks. Of course, watch out for the delivery-based buying that would have happened in some stocks. So APL Apollo Tubes yesterday was up 5% with 76% delivery percentage. A large percentage marked for delivery. So people probably believe in the argument of the promoters that the reverse merger is, or the merger of the subsidiaries is EPS accretive, because a remarkable uptick in the stock. So watch out for that. It does get scale, of course, and therefore the valuation multiples, therefore people would argue, need to meet some of the other larger players like Supreme and Astral. Who knows? But maybe that's the argument. There was, of course, strength in the cement names. So JK Lakshmi Cement did reasonably okay for itself in terms of delivery percentages. And Adani Total Gas, yesterday was another day for some of the Adani Group stocks. Save for Adani Green, everything else was in the green. Adani Total Gas stood out by virtue of the delivery percentages as well. So do watch out for some of these names. They could be interesting to monitor over the slightly medium term because of the delivery-based buying that we've seen. But that's all that we have for the trade setup today. Have a profitable day ahead. Stay safe and please wear your masks. Thanks so much for tuning in.